The markets are sending mixed signals this week. Some sectors are booming, others are flashing warning signs. From crypto volatility and record bank earnings, to pressure on the US dollar and China's expanding influence, global finance is shifting fast. In this weekly recap, we'll break down the stories you need to know, explain why they matter, and share actionable takeaways to help you stay informed and ahead. If you want clear, no-fluff insights every week, hit like, subscribe, and tap the bell icon so you never miss an update. 1. Trump Family Tokens, the Trump family's new venture, World Liberty Financial, has officially launched tradable crypto tokens. This bold mix of politics and cryptocurrency has caught the attention of both loyal supporters and speculative investors. Supporters call it revolutionary, while analysts warn it could inject even more volatility into an already shaky market. With crypto regulations still limited, politically tied tokens carry extra risk. Thinking about investing? Treat this as high risk, and never put in more than you can afford to lose. What do you think? Would you invest in a politically backed crypto? 2. Record bank earnings. On Wall Street, banks are celebrating. Goldman Sachs and JP Morgan just reported a combined $15 billion in prime brokerage revenue this quarter. Prime brokerage supports hedge funds with services like lending and trade execution, and the more volatile the market, the more banks profit. But regulators are watching closely. High leverage levels, essentially borrowed money in the system, could quickly turn from a strength into a weakness if the market shifts. 3. Pressure on the US dollar. The US dollar, long the anchor of global trade, is facing new competition. Allied nations and emerging economies are testing alternatives like the euro, the yuan, and even regional digital currencies for trade settlements. The dollar isn't collapsing, it's still the dominant global currency. But these moves point to a more multipolar financial system in the future. For investors, this is a reminder to think about currency diversification in global portfolios. 4. China's expanding influence. China is stepping up its role in global finance. At the Shanghai Cooperation Organization Summit, President Xi announced bold proposals, including launching a new development bank, forming broader energy partnerships, offering expanded satellite access for allied countries. This strategy directly challenges US-led financial institutions like the IMF and World Bank, making China an attractive alternative for many nations. If you're investing in global markets, keep a close eye on Asian economies. They're poised to play a much bigger role in the next decade. 5. Political pressure on the Federal Reserve. Economists are sounding the alarm over political pressure on the Federal Reserve. Recent actions and rhetoric are raising doubts about the Fed's ability to act independently. Why does this matter? If confidence in the Fed erodes, we could see increased market volatility, higher borrowing costs, and less stability in US debt markets. For households, that could mean higher interest rates on everything from mortgages to credit cards, even if inflation cools. 6. Asset management consolidation. The asset management industry is transforming fast. Mergers and acquisitions have topped $50 billion this year, the highest level in a decade. Firms are scaling up, cutting costs, and embracing new technologies like AI-driven portfolio management. This consolidation could bring efficiency, but it also raises concerns about systemic risk if one of these giant firms falters. 7. Market and consumer trends. 2 key trends are shaping the broader market picture. Rising consumer debt. Credit card balances and auto loans have hit record highs, signaling that while jobs remain steady, many households are feeling the squeeze of higher rates. Tech sector resilience. Despite global uncertainty, AI and tech firms are attracting heavy investment. This confidence in innovation suggests tech will continue to be a key growth driver. 8. Key takeaways. Here's what's driving markets this week. The Trump family's politically charged crypto token, launch banks raking in record profits from volatility, growing pressure on the US dollar. China's expanding financial footprint. Concerns over Federal Reserve independence, rapid consolidation in asset management, rising consumer debt, alongside strong tech sector growth. Here's what this means for you. For individuals, stay disciplined with speculative investments. Volatility is high and patience pays. For investors, factor in global shifts, currency risks, and regulatory pressures when building your strategy. For businesses, keep a close eye on currency moves and global partnerships. They could impact pricing, supply chains, and financing. If you're finding this recap valuable, drop a comment to let us know what trend you're watching most closely. That's your Global Finance Weekly Recap for the week of September 1st, 2025. Thanks for watching, and I'll see you in the next update, where we'll keep breaking down the complex world of global finance into clear, actionable insights.